All right, welcome to the weekly prep video for the week of December 1st to the 5th. In today's video, I'll be going over the action of the past week of the indexes, the liquid leaders, industry ETFs, then end the video with long and short setups going into next week, like I do with every weekly prep video. So if you guys enjoy it, please leave a like and subscribe to the channel. And if you want my market takes throughout the trading day, along with the live stream at the open and any trades that I personally take, you can sign up for the Market Pulse Discord using the link in the comment section. We still have our Black Friday sale going on through Sunday, where you can use the code Turkey25 for 25% off your first month or your first year. That is the lowest price that the annual package will ever come in at, so make sure you take advantage of the sale today. All right, we'll start with the indexes. Just a phenomenal week in the market. Could not have been any better, especially compared to last week. So just a reminder, last Thursday, we had the gap up in NVIDIA's earnings. We sold that off, just a huge distribution bar. Last Friday, we undercut and reclaimed that low. And from that point on, it was just a pure rally back through the 5-day on Monday, through the 50 and the 20-day on Tuesday. Wednesday was strong, and then half day on Friday, closing strong, up 4.95%. So just incredible action. You could not have asked for anything better after what we got on Thursday. Now we can continue to rally here, but a little pullback, some compression of volatility, and a higher low overall would be exactly what I'm looking for. But one thing that I want to point out before we go to the S&P 500 is we haven't had a higher low on a daily time frame yet, which is something that I do look for. But on an intraday time frame, we did have quite the shakeout on, what would that be, Tuesday, back under the 10 and the 5-day moving average. And that resolved to the upside, followed by what I consider a gap up wedge pop on Wednesday, where we gapped back through that previous zone of selling. We did dip a little bit, but then closed strong. And whenever you see a gap up wedge pop, even without a higher low on a daily time frame, it's something to take note of. And for me, it tells me that I have to start thinking on the bullish side. A lot of the shorts probably have played out to the downside already. So really just focus on the emerging themes in the market. S&P 500, just incredible action here. This should be eliminated, my bad. Um, awesome move, up 3.7%. And as you can see, compared to the NASDAQ, a little bit stronger because we've seen that rotation under the hood, where it's not just the mega cap tech stocks that are working. We're seeing plenty of groups in the market really rocketing off the lows. And the S&P 500 very close to its all-time highs now, even with the Nasdaq a little bit lower. IWO, the growth stocks of the Russell 2000, a very nice V-shaped recovery back through all the key moving averages this week, up 6.4%. And then into this resistance gap on Friday, where we did have sellers before on November 5th as well. So some kind of pullback into maybe the 10, the 20, the 50, wherever that is. It could feel a little volatile, but overall, like the action that we had this past week was incredible. Some kind of pullback, higher low, would be perfectly healthy for this stock or for the index. And then ARKK has been a little bit of little relative weakness there, but still recaptured the 5, the 10, the 20-day moving average this week, up 8.6%, but obviously still below a declining 50-day moving average, where those other indexes are back through all the key moving averages. Switching over so we could take a look at Bitcoin, a little bit of a rejection from the 20-day EMA on Friday, got into that 93K range, pulled back, and now we're either this is a false breakout that we saw on Friday, and then we'll resolve lower with a break of this little bull flag or bear flag, whatever you want to call it. But if we can kind of build out some buying support along this 10-day moving average right at 90K, maybe a little undercut of 90K, and then go. I'm trying to stay neutral here because I see so many quality stocks in the stock market. So I'm wondering if some of these other like risk on type groups actually their relative weakness resolves to the upside, and that would just show more participation in the rally. Ethereum, kind of the same structure, rejection of that 20-day EMA right at 3K level right now. So a little undercut and reclaim of that would be fine. We just don't want to see that like break through and follow through to the downside. Getting into the 9 liquid leaders, I did switch out SanDisk for MU. Same group, a little bit stronger action there. But let's sort this by price percent change this week to really show the strength. LITE, to me, growth stock wise, it's the leader in the market right now. Um, I don't know why that's not showing there. 27% up on the week. Had shown great relative strength while the market was making lower lows. This was making lower highs. Yes, it was volatile. Look at these daily bars, very wild action, but supported at the 20, supported above the 20. And then when that market pressure lifts, this just rips into new highs. 27% this week. Very, very strong action. AVGO up 18.5% this week. And this is not a small company. This is one of the larger companies in the US. And we had a new all-time closing high. It's in that semiconductor group. When you have a liquid semiconductor making new highs, it's not usually a bearish sign. MU up 14% this week. We had the shakeout of the 50-day move. Well, first test of the 50-day moving average, then the shakeout last Friday. Bounced right back into the declining 10 and 20-day EMAs earlier in the week, then popped through those with two gap ups. Really strong action here. First Solar up 9.2%. To me, this is the leader of the solar group, and that's been a very difficult group to trade. For Solar, not making it easy as well, but still acting well overall, right near a closing high. Google, I would say, is the liquid leader in the market. AVGO is up there as well, but 6.9% this week. It really made its move earlier this week and then just chopped sideways above a rising 5-day moving average with declining volume. This is the exact type of price action that you want to see after a big move like this, especially in a liquid stock like Google. Now, if we get an unfilled gap down, that would be a strike against this, but low volume consolidation over the 5-day moving average after a big move up, you cannot ask for anything better than that. NTRA up 3.6% this week. Very similar price action as Google. Made its move earlier this week, then just low volume consolidation over the 5-day EMA. If you're a day trader or like a 1 or 2 day swing trader, potential just like breakout here to add to your position. But very, very strong action there. GH, low volume pullback into the 5-day moving average. We're closing above that on every day, up 2.8% this week, and one of the leaders in that healthcare group. Apple, new all-time closing high on Friday. Again, when major companies like Apple are making new closing highs, that's not necessarily bearish. I don't know why anyone would feel that way, but up 2.7% this week. And then Eli Lilly, which has been the liquid leader in the healthcare area, finally had a red day, down 2.6% with a little gap down. But we did bounce at the support gap between the 5 and the 10-day moving averages. Honestly, after this amount of accumulation, a pullback into the 10 or even the 20-day EMA would be perfectly healthy for that stock. So something that I have on my radar for further pullbacks. But even that finished up 1.5% for the week. So all the indexes, very strong action. All the leaders, very strong action. Not really a reason to be bearish this past week. Getting into the industry ETFs, we'll sort this by price percent change for the week. Gold miners, really the leading group, up 13%. Just incredible action here. We had kind of a blow off top, not quite. We never got the like enormous volume that you would expect, but very kind of parabolic action. And that saw a kind of parabolic drop as well. But instead of following through to the downside, we built out a higher low, rallied up, undercut the key moving averages, but that was still another higher low on the support gap. That's why we draw those zones. And then just pure accumulation into the end of the week, up 13%. Blockchain technology up 12.7%, back through the 5, the 10, the 20-day EMA. Now just looking for like a higher low overall in that. XME, precious metals, metal and mining, back through the 50-day moving average after the shakeout on Friday, up 9.5%. A lot of those precious metal stocks, like the UAMY, LAC, that got really, really beaten up, starting to build out some higher lows and actually falling through to the upside. So a little bit of pressure relief there. And then silver stocks are just going absolutely nuts right now. SMH, semiconductor ETF. Whenever semiconductors are over all their key moving averages, especially if we gap through the 20-day EMA after a distribution day, again, mentally, I just switch to thinking of being bullish, not just overly bullish where I'm just buying everything and not using risk management, but my mentality has switched from bearish after this candle, after the shakeout and reclaim, to now bullish after this gap up. I do still think that we need to build a higher low overall when we pull back into the 50-day moving average. But in my mind, that would be a buy spot instead of like, okay, here comes the next flush lower. Next, we have ARKG, another of the healthcare related themes that I'm focused on. Huge move this week, up 7.5%, and did it earlier in the week. Very tight price action Wednesday and Friday. Exactly what you want to see after a big move up there. NLR, nuclear and uranium, still relatively weak compared to the rest of the market. We are back over the 5 and the 10-day EMAs, which is a positive, but still a lot of work in this chart. Robotics ETF really coming off the lows in a real way, up 6.5%, back through all the key moving averages, and pretty close to all-time highs here. Um, and I love just accumulation, accumulation, accumulation all throughout the week here. I'm going to sound like a broken record, but high or low, that's what I would be looking for. Let's test that 50-day moving average and hold. TAN, the solar ETF, we got the first flush under the 50-day moving average on a pickup in volume, but we held the support gap on last Friday, and then rallied back through all the key moving averages, finished with a gap up and strong close on Friday. All of the rate sensitive type groups acting really well. So to me, that just signals that we're going to get more rate cuts. But up 6.5% for the week. It has not been an easy group to trade. You can see how choppy it's been, but it's choppy and then resolves to the upside, which is obviously good. XBI, biotech ETF, one of the leading themes in the market. I would say like gold, silver, healthcare, biotech. That's where you want your money parked right now. I don't like trading individual biotechs unless they have like tons of sales each quarter, like $100 million of sales each quarter. But I do like trading LABU, which is the triple leverage version of XBI. We had the perfect undercut and reclaim of a pullback low, a support gap, and the 20-day EMA on November 7th. That was the entry for me to buy LABU. And it's been a very nice, easy trade to the upside. Trimmed a little bit on Wednesday, excuse me. And now I'm down to a trailing piece, but biotech's extremely strong. Probably not trying to chase up here, but a higher low pullback into the 10-day moving average is something that I would look for. ITB, the home builders ETF, we saw some relative strength on Thursday during that big distribution day last week. Big follow through last Friday with a gap and go. And that was really the time to take note of home builders. And I'm sure there's still very negative sentiment on this group because it's been in such a large downtrend. But whenever you see like negative sentiment and then this type of price action, to me, that shows that this could be an emerging theme in the market and not one to ignore. So we should still expect a lot of volatility in this group because we have a declining 200-day moving average. We have overhead supply here. So expect a lot of volatility. I don't want to buy things within that group on strength because of that. But as we pull back and build out a higher low on the indexes, some of the individual names will really tighten up right near highs. And then if this is a group that's going to emerge and be a potential leading theme in the market, then those leading stocks are going to have plenty of room to the upside. XRT, same exact idea. I was very, very bearish on this going into the week. We lost the 200-day moving average. And then had a good day last Friday. But this type of follow through and individual stocks, you have Kohl's, you've got Urban Outfitters, you have American Eagle, you have Abercrombie and Fitch. Very, very strong action across the board in that group. Huge volume coming in on many of their earnings. So I don't think this is a group to ignore, especially because we have that poor sentiment because we had poor price action here. So it will take a while for people to actually invest in these stocks. And even though they're retail, like clothing and lower volatility, if you study ANF a couple of years ago, it went up 220% without losing the 20-day EMA for more than 2 days in a row. And those are the types of trends that I want to catch. So we have that poor sentiment. It will take plenty of price action to change that sentiment. So you're going to see if this is a group that holds up and this isn't just like a short squeeze and people covering into the like holiday weekend. I really think that this is a group to focus on. UFO up 5% this week, back through the 5 and the 10-day. not anything exciting there. FDN, Meta had a really nice bounce back along with Amazon. So this recaptured the 5, the 10, the 20-day EMAs, but still like not a very clean chart here. So not something I would be focused on. XLY, consumer discretionary, same thing as XRT, that retail ETF, actually holding up extremely well this past week. IYT, transportation ETF, we've seen some of the airlines hold up relatively well, and we're now seeing like travel and leisure stocks, which we'll get to with PEJ in a second, really starting to shape up. So this is a very volatile kind of shakeout in the handle of the base here. So would like to see like a tighter contraction into the rising moving averages, but this is a quality base overall that if we break to the upside and take out this resistance gap, like this has been building for multiple months here. PEJ, the leisure and entertainment group, again, like a couple of weeks ago, I was saying anything that the average consumer in America touches, we've been seeing major downtrends in, we've been seeing major weakness in. But this type of price action is something where I have to change that mentality and say, until this price action breaks to the downside, I should start looking for higher lows and the leading stocks in that theme to trade. XLB up 3.5%, back through all the moving averages. IYZ back through the moving averages, up 3.5 as well. ITA, aerospace and defense, we had the shakeout, but we're still below the 20. Still needs time to like build out the left side of this base. That's the aerospace and defense ETF. XLF, the financial ETF. This is what really gives me hope in the market, where I was losing hope because it was losing the 200-day moving average after another lower high, rejection of a resistance gap. But this past week, back through the 5, the 10, the 20, the 50-day, and closing well, all in one week. I know it happened on lower volume, but to me, that just means less buying was needed to get it right back up to where people aren't feeling the type of pressure that they felt down here. And they did so with just a small amount of buying. So there's still probably some money on the table that we can like build this out. To me, the lower volume rallies, I keep hearing that as a bad thing. I've never actually seen that play out as a bad thing. IGV software ETF still under a declining 200-day moving average, so not really the group that I would be focused on. KWeb, Chinese internet, still below the 20-day EMA, still a lot of messed up charts in that group. So until those repair, not going to be a focus for me. Cybersecurity, we had some weakness on Wednesday with Zscaler gapping down, but a gap up reclaim of the 10-day. Hopefully that was the low of this pullback and we can do some chart repair, but that will take time. MSOS, cannabis ETF, just hovering around the 200-day moving average. Kind of feels like this theme has lost some steam. XLV, the healthcare ETF, up 2% this week. Big move on Tuesday, then consolidating over the 5-day moving average. We do have one gap down, but it happened on very little volume. We're still over the 5-day moving average. So to me, that's not anything to be too bearish about. XLP up 1.9%, back through the moving averages, still below the 200-day though. So a little bit of weakness there. And then last one, XLE, another higher low shakeout of the 50-day moving average and a nice strong close on Friday. So we talk about emerging themes. To me, XLE, the energy theme, is one to focus on because we still have this massive, massive base. We started to build out higher lows, first below like declining 20 and 50-day. Then we popped up. Then it's like right around that 200-day. Then a higher low at the 200-day. Now a higher low at the 50-day. So while the group is still very volatile, you have a flattening 200-day moving average. Some of the leaders in the group are actually showing great relative strength, trading right near highs, and those are the ones to be focused on. Before we get into the long and the short setups, let's go through the NAAIM active investors exposure. So this is taken as of Wednesday's close for their positioning, not sentiment, but their actual positioning. And then it gets reported on Thursday. I was hoping we would see this number go down because we have that big distribution last Thursday that was not accounted for in the 86 reading. But with all the buying that we got Friday, Monday, Tuesday, Wednesday, Friday of this past week. It did kind of tick up a little bit, up about 3% at 90% right now, which over 95% is my threshold where I start to get a little bit nervous because if everyone's already in, who else is left to buy? We're still under that threshold. We're seeing more and more groups emerge in the market. We're seeing the leaders acting well. So until we really breach that 95% area, to me, this is just like a non-signal. Now, I wish this was lower because if this went from like 86 to 79 or so, then there's still a lot of money on the sideline that did not participate in the rally this past week. That eventually, if price stayed elevated, they would have to FOMO in, like we saw earlier this year or earlier in October, where we went from 84 up to 101, and we saw that big burst in the mega cap names. I don't think we need that right now because we have stayed elevated. There's still like only like 10% until they go on margin to get into the market. Where if we drop down, that would have been more money to come in and to FOMO in as we rallied higher. So I wish it was lower, but it's not at an elevated level that really like matters to me. And then we still have earnings season going. And actually, last week, very late on earnings. This week, actually, some important names: CRDO, MDB, Monday after the close. Tuesday after close, we've got MRVL, GitLab, CrowdStrike. That's one that's more important to me. Pure Storage, American Eagle. That's in that retail clothing space. I'm not going to read through all of them, but still know when the stocks that you own are going to report or the stocks within the same group that you want to own report. So you're not putting on exposure right before a binary event like that. All right, long setups. We'll sort this by average dollar volume. So most liquid to least liquid. First up, WDC, one of the stronger names in that memory group. We saw SNDK kind of have some weakness over the past week. Even though it was included in the S&P 500, it gapped up to 250 and sold off on that news. So for me, not the name in the group that I want to be trading. I want to look at some of the stronger groups or some of the stronger stocks like WDC, back through its earnings close, back through the key moving averages this week. Still expecting a pullback in the indexes, so I don't want to chase it up here right into a resistance gap where we know sellers have been present before. So first area to watch is the gap and the 10-day EMA right around 155. I would rather be a little bit more patient for the pullback into the 20-day EMA and the high volume close from earnings right around 150. So there I could size up a little bit more aggressively, keep my stop under the low from November 25th, and actually play this for a larger move. Open door. I keep coming back to this because if they were going to kill the stock, it should have been killed on earnings. This is like gap down on earnings. Instead, we gapped down and rallied from 540 up to $9, like relatively close to new highs. Then we put in a higher low. We got tight the rest of this week. Depending on what the market does, if we get a shakeout in the market, which I kind of expect like some type of pullback next week, a shakeout of the lows of this consolidation area of the 20-day EMA right around 740, and then a reclaim of that area of that low would be the buy point for me. If we get a gap up, an opening range break, you could play that on strength. I would be a little bit more hesitant to do so because we've already come off the lows in such a real way. So for me, I've got alerts at the 745 spot. Rivian, want to zoom out on this one because it is a massive, massive stage one base. Like this has been going sideways for multiple years now. We have a gap up on earnings up 23%. We had follow through while the market was strong, up another like 15% or so. Then as the market came under pressure, we lost the high volume close from earnings. We shook out to the 50-day moving average, ripped right back higher. And now with this large base, that's something that I will be a little bit more aggressive with position sizing on and trying to get into a name. Because if we break out of this base, it will have plenty of room to the upside. Um, but you still want to manage risk because it might take a couple attempts to get situated in a name like this. Uh, my Tesla trade earlier this year, same thing. I got stopped out twice, got it right on the third time, and it really paid for all those paper cut losses. So we still want to manage our risk with the trade. We want to like position size correctly. Pulling back, depending on if we get a pullback on Monday. If we get a pullback on Monday, this gap zone I'm not very interested in. But if we can get like a tight day on Monday and then start to pull back Tuesday, Wednesday, then you have the 5-day moving average catching up to this area right around 1620 as a potential buy point. Otherwise, first test of the 10-day moving average after this type of price action is something that I'd be interested in. Let it come down, build out some higher lows on the intraday time frame, and then recapture your daily VWAP as the entry. Again, it's not like an A plus setup right here. I do want to see more like contraction, but that big of a base, I have to have it on my radar. Speaking of big bases, we have NNE. Zooming out here, we've got a multiple year base from 2022 till now. Very nice rally back up, pulled into the 20-day EMA. I love when stocks kind of hold just under the 20-day for a little bit and then rally back up because it shows anyone that uses the 20-day got shaken out here. And if that's your risk management plan, like good for you for following that plan. But when you see this not follow through the downside after a couple days under a key moving average and instead rallying back up, that's a stock to keep notice of. And we're right at this high now. You could buy it on strength through the breakout. I like to buy things on shakeouts a little bit better or a little bit more. So pull back into this 10-day moving average right around this 84.80 spot, then manage risk under the 20-day EMA there. INCY, we talked about biotechs being extremely strong. This is one of those individual biotechs with plenty of revenue, so it's not at as high of risk for those like major gap downs. Still, I'm going to size a individual biotech a little bit smaller than if I was trading in NVIDIA, a Tesla, anything like that. But waiting for a pullback into the 20-day moving average in this gap zone right around 102.50, then I can keep my stop under the low of the pullback, under $100. Still 2.5% risk on the trade with a 10% position size. That's less than a 0.25% portfolio risk. So that's INCY. NXT, a solar name. We've talked about how tough the solar names have been to get involved. We've bounced at the 50-day, bounced just under there. Now a shakeout of that 50-day of the two lows from Wednesday and Friday, recapture of that area, that $89 spot. That would be the entry, and then just keep your stop 2 or 3% below. SYM, monster reaction on earnings, up 40%. Follow through on day two, up 13%. We don't need to chase it up here, but if the market goes through a pullback, into this high volume close from earnings into the gap zone right around $78. That would be a really nice spot. So I'm hoping we get like a 2-day pullback on the indexes because this type of price action and zooming out, this is a new all-time high for a relatively new stock, like 2022 IPO'd. These are the types of names that can go on monster runs if the market stays strong. So I don't know if we'll get a pullback all the way down to the gap zone and the high volume close. If so, I'm definitely taking advantage of that spot and sizing up more aggressively. But like another 1-day pullback and then a shakeout recapture of those lows, kind of like the $82 spot, previous highs. That's a spot that I'd look to get involved and then get my stop under the high volume close. Kohl's, very similar story, monster earnings up 42%, follow through on day two up 7.5%, good day on Friday up 2%. Still don't need to chase this. If you take a look at ANF's chart back in 2022, it had a first gap up while the 200-day was declining. So we still had to work through all of that left-hand side supply. We built out a base, and then it was the secondary earnings gap up that it was up about 32%, if I remember correctly. It rallied and then built out a flag, an earnings flag. That breakout led to that 220% move without two closes under the 20-day EMA. So don't need to chase it up here. I've got my alerts right around $23, so I could be prepared when it comes into that high volume close. That's the spot that I would look to size a little aggressively. And again, this is a potential emerging theme, something that has low sentiment, but extreme price action, extreme volume accumulation, and not just a single stock within the theme. Multiple stocks within the theme are starting to break out. So this is kind of the perfect storm for me to be patient on the entry, but be aggressive with size in that emerging theme. And if it doesn't end up being an emerging theme, I probably forget the trade in a week or two. But these are the types of setups that when they do work, they can work in a very large way. Speaking of an emerging theme, BLD, this is a home building stock. And to me, it's the leader in the group, very close to its all-time highs, where you have plenty of other home builders still under their 200-day moving average, still under their 50-day. This and IBP are the two that I'm most focused on, right near 52-week highs. Still don't want to buy it on strength because we know ITB is above a declining 200-day moving average. So we have to expect a lot of volatility in the group overall. And if we expect volatility, we don't want to buy on strength because we're expecting more of that price action to whip around. So a shakeout is a better entry tactic in those situations. Pull back into this previous resistance area, right at the 440 spot. You'll have the 10-day moving average catching up to that very shortly. Then you can manage your risk under the 20-day EMA. If we pull back even further into the 20-day, then you can manage your risk at the 50-day. But again, this is a group, because it's an emerging theme, I'm going to be more focused on and be willing to take a couple more paper cuts getting situated in those names. Let me just go to IBP and then we'll get back to Frog. Same group as BLD, very similar price action. We do have a gap zone to work with too. So that 260 spot, 10-day EMA, that's the pullback area that I would look to get involved. Keep my stop under the 20-day EMA there. Frog, not in the right group. Software, still under that 200-day moving average, the IGV ETF. But Frog itself, extremely strong price action and some compression of volatility, which is very nice to see. Because the group is so weak, I don't want to buy it on strength, want to buy it on a shakeout under the high volume close from earnings, the $60 round number spot, and the 10-day EMA. Reclaim those levels. That would be the buy point. Then you can keep your stop kind of at the 20-day EMA. It's about 4% risk. GSAT, probably my favorite chart coming into the weekend. We've got a monster move up from 18 to 64. First test of the 20-day moving average after a new high is usually a great risk reward spot. We undercut and reclaim that. That would have been a awesome spot to buy on the 21st. We rally back up into a resistance gap where we know sellers are present. So no shock that sellers stepped in again, kind of pulled this back. But we've got very low volume as we pull back. Two different spots to watch. Like if we just take out Friday's high, because we have such nice compression here, I wouldn't be opposed to buying this on strength, just through the $61 level, stop at the 10-day EMA. I probably wouldn't size it as much up, but this is a really like incredibly strong chart during what the indexes were going through. So that's like I'd be fine with buying this one on strength. But if we do get that market pullback, this 20-day EMA and gap zone around 57, like 15, I would be a little bit more, well, significantly more aggressive with sizing. Like if I'm buying this on a breakout, probably putting 5%, 10% max on this. If I'm pulling back to the 20-day and gap zone while the market pulls back, but this chart is still intact, that's where I would look to be more aggressive, the 15, 20% position sizing, because I can keep my stop so tight at that point. PARR, we talked about the XLE energy ETF that was building out those higher lows, had that very massive base. PARR to me is the leader in that group, right near their all-time highs. Just looking for a little shakeout into the 10-day moving average at 44.20 as a potential entry, stop under the 20-day EMA. ADP, whenever I see this type of price action where you kind of like immediately fail like at this like bull flag, we lose the 20, the 50-day, and then very quickly we respond to that area. When you pull back on lower volume, it's a name that you have to be focused on. UUUU was a great example of this earlier on. This was more of like a 1 day bar down, but it was like a nice bull flag. Looked like we were breaking to the upside. Big distribution candle, but instead of following through, we immediately reversed and retook out that high. Then when you built this flag, very nice buy point from 11.5, rallied up to $27 in a short amount of time. Now, I'm not saying that we're going to go straight up like that, but we've already had this massive response to that area, starting to pull back and build out this flag. A undercut and reclaim of the 5-day and of Friday's low could be buyable. It's a lower probability setup at that point. I think we do need more time to kind of like build out a flag here, let that volatility subside a bit. But look at volume just falling off a cliff as we just consolidate over a rising 5-day moving average, still above the breakout point. It is a thinner stock, so you do have to size that down. It is a biotech stock, but right around that like $100 million level. So would not be position sizing this very, very large. Nothing over 10%, like for sure. But a 5% position on a little pullback could work. Then finally, we have BW. This has been on the watch list all week, pulling into the 20-day EMA for the first time after new highs into a support gap. Great risk reward spot earlier in the week. Friday, we had an inside candle on super low volume, obviously a half day. Another name like GSAT, where you could buy it just through Thursday and Friday's high on strength, then your stop is the low of the day. That's perfectly fine risk. If the market comes into a pullback, then we've got the 20-day EMA and the support gap right around 560 as the spot to try. Again, with me, a little bit more sizing there. Then on the short side, well, same thing, most liquid to least liquid. First up, we have Palantir. I still have 1/3 of a short position in Palantir that I started on November 12th. Nice covers into the weakness last Friday. Now, a little bit of a rally back up. That's completely fine. You should expect that with the market overall rallying. But while the indexes are back through all the moving averages, this is still below declining 20-day, well below a 50-day. And this could be a late stage base breakout failure. It has already run from $6 up to 207. We had this quality base here. We broke out before earnings, but then we sold off on great earnings. And when you start to sell off on great news, and then you start to show relative weakness while the market's ripping higher, if the market does like actually roll back over, this is something that can very quickly test the 200-day moving average and then even potentially lower. But because the market is so strong, I don't want to short it like on weakness as it's like already below those moving averages. I want to see one more day rallying back up to the 20-day EMA, still within this kill bar range on Thursday, still where there were sellers, and then just manage my risk above Thursday's high. Netflix very much looks like a stage 4 downtrend. We have a base that broke to the downside, a lower high below the declining 50-day moving average. Tons of weakness all last week, even though it rallied a little bit. We're still under the 10-day moving average, while the index is much higher. So need a little bit more of a rally, come back into this congestion zone where we found buying support. So potential support turned resistance at the 20-day EMA. This 110 spot is the spot that I've got alerts at. Then once we uppercut that, now you're looking for intraday weakness, a loss in the daily view app, a green to red move, something like that to trigger your entry. Then keep your stop at whatever the high of the day is for Netflix. Coinbase, a little bit of a bounce as crypto has bounced, but we took a look at Bitcoin and Ethereum, still acting a little bit weak. Could be bear flags breaking to the downside if the market like still needs to pull back more. And Coinbase losing the 200-day moving average, rallying back up into that area. We've got a nice area to manage risk against. So an uppercut of the 20-day, the 200-day, and that resistance gap. Right around 284 is the potential short. Stop, I would keep it above 293. We've got 3 quantum names on here, and whether you want to trade these or not, even if you don't short, I would have them on your watch list to see if we see the groups showing relative weakness resolve to the upside or the downside. Because in a strong market and a market that's continuing higher, we see more and more groups participating in the rally. And that's what we've seen all last week. Anything that showed relative weakness eventually broke to the upside, which is a good sign for the market. Now, we've got a lot of quantum names that have been relatively weak, still under declining 10-day moving averages. So as a group and kind of a risk-on group, does this group rally back into the market, kind of join the rally? And at that point, it's like, what else could you ask from the market? You have to be bullish. But if we see this start to break down, then we finally have a group that was showing relative weakness that is breaking down, and that would be a sign that this little rally that we've had might come under some pressure. Again, I'm still thinking longer term bullish because of all price action out of the leading stocks and leading themes, but it might not be time to press the gas on the long side if we start to see those relative weak groups break to the downside. So RGTI, what I would look for here, just a break below Friday's low as the entry, stop above this pivot high. If we do get more like morning strength on Monday or Tuesday, a uppercut and fail of this pivot area, right around $27 could be shortable. Stop would be above the 20-day EMA and the gap zone at that point. QBTS, very similar, rally back up, but then 3 days of tight price action under the resistance gap and the 10-day EMA. Little uppercut and failure at that level would be a little bit better for me to short. Um, but a breakthrough Friday's low and then just a waterfall down would work as well. Stop would be still above that 10-day moving average in the resistance gap. Then QBT, probably the weakest of all the groups or all of the quantum names. We did kind of bounce back here. With this through Friday's low, sure is shortable. But longer term, I want to see a rally back up into the 200 or sorry, the 20-day, this resistance gap at 1260. There, I could be more aggressive and keep my stop over the 200-day moving average, where if I'm shorting this on weakness, then my stop is at Friday's high. Next up, let me go to Spotify. So Spotify, very similar to Netflix, kind of a later stage base. It's already moved up 10 times from 68 up to 780. Later stage base, we lost the 200-day moving average, rejected at a lower high rally, and then really flushed lower. This is under the 10-day moving average. Still don't want to short it down here. Let it rally back up into the 20-day, right around the 620 level, and then start to look for that intraday weakness. Lost the daily view app, green to red move, something like that to actually enter the short. And then your stop is whatever the high of the day is. HIMS, we're starting to see a little bounce back, but zooming out, it's bouncing kind of right into the previous support areas, now potential resistance, and into a resistance gap here. So the 20-day EMA, not going to short into there. Let it rally back up into the resistance gap at 4140, then start to look for weakness. Got two more for you. RCL, Royal Caribbean. A lot of those names have been weak. Now, this is a theme that could, again, PEJ, the leisure and entertainment theme, really rocketed off the lows. And we have Vikings, VIK, which is another cruise line that made new highs last week. So maybe this is a group that turns it around. But rally into that 200-day moving average, that resistance gap at 278. That's the spot that I would look to short, and then just keep a 3 or 4% stop. And then Dave, last one, also kind of a late stage base in my eyes, ran from $5 up to 290. Had this nice pivot that failed on earnings. Then we lost that, lost the 50-day, fell all the way to the 200-day. We don't want to short on weakness on an extension into a key moving average. So we have that bounce back up. And now we're starting to see a little bit of trouble clearing this 50-day moving average. So a little gap up, a green to red move, that would be the short spot as we lose the 50-day, stop at Friday's high. And that's going to be the weekly prep video for the week of December 1st to the 5th. If you guys enjoyed it, please leave a like and subscribe to the channel. And if you want my market takes throughout the trading day, along with the live stream at the open and any trades that I personally take, you can sign up for the Market Pulse Discord using the link in the comment section. Again, we still have our Black Friday sale going through till Sunday. 25% off your first month or your first year using the code Turkey25. That is the lowest price that the annual package will ever be priced at. So make sure you take advantage of the sale this weekend. I hope you guys have a great weekend. Enjoy some time with family, and I'll see you back on Monday. Take care.